Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Scott Redler on the line, Chief Strategist at T3 Live and T3 Trading Group. Scott, did you enjoy the sports weekend, the Derby and the fight?
I actually fell asleep before the fight, unfortunately, but I heard I didn't miss much. A little bit of a defensive duel that people wanted a little bit more action with. But I guess you could say that's a little bit like our market, right? We're in this range,
Wow.
and it looks like we're going to get some action here and there, but all of a sudden we're right back in the same spot.
What a great analogy here for the market. I'm pulling up your chart here of the spiders here, just throwing head fakes all over the place and dancing around the ring on Thursday. We had to break down, just came right back on Friday here. Man, oh man, it's a time to finally buy into this upward momentum and get ready for new all-time highs. There's a cautious stance warranted as always.
You know what? Ranges are meant to frustrate as many people as possible, so this way people can't go along for the ride. And unfortunately, that's the way the market is. And I know for me last week, I thought I was a genius, right? We had the outside day on Monday. That's when I went from holding multiple positions to tactical. And then on Thursday, I got pretty bearish also. I was like, wow, we're breaking 2092, 2094. We see weakness in the mid caps, the Russell, the bios. I beta tech's not acting well. So I pressed the short side and came in Friday. The futures are up. And I said to myself, I've seen this movie before. I'm going to give myself an hour, see if they fade them or it's a gap and go. And I would say by 10:30, I was out of all my shorts because, the S&P reclaimed that 2091 to 2094 trend line. If you look on that chart, that was my line in the sand. And I was like, you know what, though? I'm not feeling comfortable enough to start getting back in 4 or 5 longs and switching the trade. So I come in today flat-footed. But I guess it's better than if I shorted more on Friday and now I was, net heavy short into today's up open, because that would be a lot more complicated than just a little upset that I didn't, switch and jump on, because switching is hard, because sometimes you can lose on what you had on, and then you switch a little bit late, and then all of a sudden, you're over trading. So at this point, I'm in a spot where I think a lot of traders are, where you're like, okay, can we put on positions and get a real multiple week trend versus revisiting the same spot over and over again each week?
Yeah, I mean, the old whipsaw is, and, when you're reversing positions, like that, you really have to look for a very good area, because that's really, I think that's one way, when traders get chopped up and lose the most amount of money, it's when, they're flipping, long, short, long, short, long, short.
Right.
They never stick with their original plan. I know you like to look at the, some of the small caps, and what'd you make of their move on Friday? Is it a little concerning here that they didn't get the follow through like the big market did?
It was a little feeble compared to the bounce you saw in the S&P and in some other sectors. So I think you can watch that play. It might actually play a little catch up, where if just say the S&P holds this gap, some late shorts that were like, okay, it was feeble Friday, I'm going to stay here. They stay, and maybe there is a quick long in the IWM above Friday's high of like 122.16, because the bigger resistance doesn't come into like 124 if you look at the chart, and then you can even push a little bit more. So I think it'll be interesting to see what happens. So I think it'll be hard for the S&P just to break out and go to new highs without some of the other sectors following along. But I think if you got short on the outside day on that last Monday, or when we broke the ascending channel, because if you look here, this ascending channel broke right around 125.74, and then you had your inside day or two on the right side of it, and then you had your downside follow through on Thursday into Friday. So if you covered into that Thursday swoosh, because you look to the left, a lot of support around 120, then I think some people are going to try and reshort perhaps 124 or 124 half, and that'll be a little bit of the grudge match spot on whether or not it gets reclaimed or rejected. But a lot of people would have liked the S&P to do what the Russell did last week, and unless we reverse today's up open, quickly, I feel like it's going to be hard for the sellers to take control, which they could have had last week.
Just want to cover a couple earnings stocks here, and are you disappointed in the reaction to the to the Apple, the way that traded? I guess you have to base it on the fact of the kind of run that it had into it. So and gapped up at pre-market trading, and then gave a lot of it back here. Actually, sold off over 10 points here. 125 turned out to be a big level, and it's just kind of just like a great opportunity here to pick up Apple on the cheap.
Well, at least after earnings, you had a strategy. I know the past 3 quarters it gapped up, held the gap, and created a nice momentum move. So on earnings day, when it gapped up above that pivot of 133.60 and didn't hold it and filled the gap, that right there for an active trader was a signal saying, you know what, this time feels different. Let me not just load up here and wait. Let me get out of the way. Let me maybe get short. And then you had the 3 down days below the 50-day, which is interesting because of the way you just said, even the trap market, the misdirection market. One of my rules is, if you break below a key moving average, it only means something if it stays below it for a day or two. Otherwise, it could be a trap because the computer's probably stopped out long saying, oh, if Apple's not above the 50-day, I don't want it. So it broke below it, and then Friday reclaimed it. So that was like your fake out trade. So now, with it up a little bit near, what is it, near 130 right now?
Yeah.
Half
Yep.
almost taking back.
129.75.
Where is it?
129.75.
Okay, so basically it's taken back almost a third of what that move was. So you had your oversold snapback, which was Friday. Now we're getting a little follow through. Uncle Carl was on Wall Street Week Sunday saying he didn't sell a share and he still loves it. So it could be a little bit of that. It could also be a little bit of the future. So, if you got long on Friday, my suggestion is you trim a little bit into the up open, but then I wouldn't just overly be looking to short it because it's bouncing. I would say there's a point of reference around 131, 131 half. I think it's going to need a little bit of time to work off that earnings move. It's going to need a little bit of time to get that buyback program going, and then you have the dividend, and then people want to see, I guess, shipments of the watch and whatnot. But not the end of the world that it didn't hold the earnings gap, but it just means that the trade changed and it might be a little bit slower. So you just have to approach it differently.
Love to get your take here on Netflix. Big gap and go. Now you figure when a stock like this has a kind of move like it does, and then consolidates within a $20 range, it's going to do something out of here. What's your take on Netflix?
I think it's one of the few that actually, held in tight after an earnings move. You had a big gap and go, like you said. It's been consolidating. It just let the 8-day catch up, so it's not as extended as it was. So it, just kind of rested, creating a nice bull flag. Some traders are probably long versus like the 552, which was the pivot low from 423. And if it starts to get above, I would say what's one level like 565, and then you have another level at 572. If it starts to go with volume, I think traders will try and take it for a momentum move to clear this bull flag set up after holding the earnings gap. But you're going to need a strong market for that. And if you do see that happen, then I would think, it would give some traders clues that there's an appetite for risk and that you're getting some upside follow-through in key names because that's been so hard to find. So that would give you some hints that maybe a breakout in the overall indices is coming because they're letting names like a Netflix that's strong break out again. This pattern's a little bit different than the Amazon pattern. The Amazon pattern, not the end of the world, but it didn't have enough strength to hold the day of earnings move. It actually trickled into the gap. If you looked at it, that was actually a regular reversal on Friday, just for people who want to see what that tactic's like. All right, you had your big earnings move. It traded into the earnings gap below that 439. But then if you look on a Friday, it traded below the low, which was, let me just get that. The low of Friday was, what do you have there, Joel? It's the low of Friday.
Let me pull up my Amazon here.
On Amazon. Oh,
Yeah.
the low of Friday, I think,
You know
was
what?
419.
This one I took a lotto into the earnings
Right.
on the 400 call, and I sold it on the open. Okay, and I was I don't care. 440 was my target, and
Yeah.
I was lamenting, and because that day it continued to move up, and I just I was saying to myself, I don't care. I made the journal. I sold basically the low of the day. But how much more momentum can you take on this here? My system's a little slow here, pulling up the low.
419. Yeah,
419. Okay.
I was in the same trade with you. I took Amazon calls into the number two, and what I did is I actually I shorted the stock half
Right.
my calls,
Right.
and then I shorted and let the calls get called away for the actual the short foot, the calls went for my short and covered it. So
Right.
I left a little bit on the table and I held some. But if they just say you sold the day of earnings and you said I want to see if it holds the gap and it didn't, it went below 419, the Thursday low, came back above it on Friday. So the way the red dog reversal works is you buy 419, you put a low in at the stop of Friday, which is 416, so you have a $3 risk, and perhaps that's your pivot in the gap for now momentum. And then today it was upgraded. So if you did take a third long, because that's part of the rules, if you take it for a momentum bottom, you take a third if there's follow through. So today getting a little follow through, and with Amazon, now I would say if it holds above 425, perhaps that was your pivot into the gap, and now you have a decent swing. And if something like Netflix is going to break out and the market's going to go, you need some leadership, and if Amazon, if anything's going to provide some leadership, Amazon could be part of that that package. So perhaps that low from Friday into that RDR pattern was that.
And I'd love to talk strategy with you, especially the red dog reversal and Facebook. Did you have one in Facebook?
It tried. Facebook, the one good thing about Facebook is that, on the day of earnings, everyone had the same thought process, or everyone had the same opportunity to switch gears because nobody knew if earnings was going to be enough. They beat by 2 cents. It was near all-time highs. But then if you look at that pivot at 84.74, which was the prior, which was almost like a lower high versus the high that was put in on March 24th, it traded through it, squeezed some shorts, went as high as 85.59, came back below. It created a big outside day, the day of earnings. And when you see that, active traders say, you know what, the trend there might have just changed. You get out of your longs, you get out of your swings. Some people get short. So at least it wasn't like a gap down and pressure everyone and everyone's trapped. This was okay. You have the same opportunities to make adjustments around your longs, get short. And then since then, it's corrected a bit. So now you did see somewhat of a red dog reversal on Friday. We traded below 78.32 with the low on Friday of 78.11. So really, what is that, like 27 cents worth of risk, and closed okay. And today you're getting a little bit of follow through with the futures. So that strategy tells you, okay, you made a little bit on that reversal Friday. You held the third. You saw some strength. And now I would think for Facebook, it's going to need a lot of time to rebuild and get momentum. I guess the next spot would be like 80.50 to 81 to see if it gets rejected there or reclaimed for better action. But like I said, you sold on earnings down that outside day. You had the opportunity to nibble on Friday, and you took some overnight. You sell some, and then you see if it builds with your path of resistance in front, which could be 80.50 to 81.
Do you put any significance, like in a series of higher lows? I see we hit 85.59. That's going back. It's not quite the all-time high. All-time high is 86.07. But do you put any significance when you see like a 1, 2, 3, 4, 5, 6 lower highs and not quite 6 lower lows? Is that something? I mean, it's definitely not bullish here, but do you start to get a little interested when it starts to break above the lowest highs of that of that series?
Yeah, because what that does, it creates like a descending channel. So
Okay.
a lot of the bears, what they'll do is if just say there's 7 lower highs, it's not as visible as you see here in Facebook because it's been a little bit more erratic. But that first of all, that big outside lower high, which you just mentioned, was a day of earnings, and that fell in front of the prior high. So it's almost like a little bit of a double top, right? So that's a few bearish things. But then when you come to a series of lower highs, you could draw a descending channel, and then when that trend changes and you get your first, higher high, that's when shorts have to say to themselves, okay, that trend might have changed. They cover, and people who are looking to buy the dip say, oh, this is my adding point, and that creates a good trade. Like you can go, like let's put Tesla up, for instance.
Okay.
It's a little bit more pronounced, where you had that descending channel in Tesla, right? Let me get the chart up.
Okay.
And hold on, having a little problem with my charts here. And you had a lot of, hold on, you had a lot of lower highs, right? Getting back all the way from the March area. Let me just get it up. Okay, here it is. So for the first time, when Tesla broke that series was the gap and go on April 6th, right? So you look at the chart, you could basically draw a really big trend line all the way from that peak that took place back in that August September time period, right around September 4th. So every time you get to a trend line of lower highs, people say, "I'm going to sell the rally, sell the rally, sell the rally," until all of a sudden they sell the rally and it doesn't work. So on that day, which I think we posted the chart in April when it broke above 207, that was the first time that trend changed. And if you were looking to buy a dip area, that was it. And then it went on the right side of that trend line. And then remember, it busted above with that 213, 214 to give follow through to that, to the new upside move. And now it's trying to have higher lows. So it's interesting with Tesla this week. You have earnings, so you have the event out of the way. So the shorts aren't worried about some kind of blockbuster scenario, so they're not as worried there. So now it's just about whether or not the earnings are going to be weaker than expected, because most people think that this quarter is not going to be great. So for me as a trader, I'm not going to probably have anything into it, but if it holds 220 and the earnings aren't as bad as people think, maybe there's an additional move above 237, 238.
Did you see the Avengers this weekend?
It was such a beautiful weekend outside
Yeah,
that
there you
I
go.
didn't see it. I travel soccer, travel basketball, this, that. It
So
just, I wanted to. How was it?
I didn't see it. I was busy. Niece's graduation, the Derby, and the fight. But asking you about the House of Mouse here, Disney. Carl got active in it, or rumors. Let me say rumors of that. Stocks had a great run since earnings here, trading up in the pre-market near the all-time high. Is this something you're going to chase, or earnings are tomorrow morning here? What's your take on Disney?
Wait, when did Uncle
It was a
Carl come out and
rumor. It
say?
was a rumor. It was on the day, I believe, the day that it spiked up to the all-time high when it went to 111.66. It was just, let me see if I can pull it up on my pro here. That
No,
wanted
I
to.
actually I remember that. I thought there was something new today. I just
No,
I
no,
didn't see
nothing
that.
new today.
Well, something like this, what you do as a trader, you write down 111.66. That's the pivot high that was done on April 27th. It's strong. It's been trending above the 8-day. Last time you had a huge gap. Stock's strong. Looks good if you're an owner, an investor in Disney. Congratulations. It's a big name that some people do hold for a long time, showing you that the market's not rigged against you. You could sit and hold and buy a few names. Short term, though, approaching it. Um, to me, it doesn't interest me that much. What will interest me is if it went above 111.66, held it and extended. That would show me that there's momentum in some of these names, and that the overall market could have more momentum versus one of the best companies in the world with a blockbuster report, kind of like what Apple did, but you can't hold it. That's how these things are priced in, and not as powerful. So I'll watch that for potential market thoughts, but I probably won't trade it.
Okay, MGM, not great earnings out this morning. Had the fight over the weekend. Here's an interesting chart here. He spiked down, and now we're just kind of climbing back up with lower highs. Also got, Wind didn't deliver good numbers last week. Is this going to be something on your screen today?
I've been thinking about them. I used to be very active in these names. I used to be on my morning note every day, MGM, LVS, Win, and that was like 2012 into 2014, and then it all peaked. And then since then, the data's been disappointing. The information on the has been disappointing, the whole 9 yards. So there's been enough blood on the street where perhaps there is some kind of reversal in this whole broken group. MGM has actually acted better because, I guess, it didn't have the Macau exposure. If you look at the chart, though, you'll see it is in a descending channel, and I don't know, you'll see how it reacts to the earnings, but, technically, if it were to get above 2250 and hold above 2250, and then it could start a new trend, and that would break the trend from, early 2014. Lately, though, it hasn't been such a compelling trade. The casinos haven't been compelling for more than a day and a half. I will. So I would say don't watch it today, see how it reacts, but then ultimately above 22.5 and sustaining that, would be a better trend for those in MGM. I was all over this name from like 8 to 22, during that whole bounce back, and it was like every day I looked at MGM and win and LVS, and lately I've been avoiding it because it's been just a problem stock area. But it could, one man's trash, it could be another one's treasure if you're not stuck in it for a few years. So it's worth a look.
That's a great point there. If you have a good feel for something, it's trending, you have an idea, and then, then ride it for as long as you can. And then when it changes, shift gears. Maybe you don't buy the bottom and sell the top, but you could certainly gotten chopped up here going back to July of last year. Scott Redler, Chief Strategist at T3 Live and T3 Trading Group. He joins us every Monday and covers about 20 stocks. We really appreciate it, Scott. Great outlook on the market. Have a great week. We'll talk to you again next Monday.
Sounds great. Good luck.
Thank you.